We're going to go over the 11 major retailers that have declared bankruptcy so far in 2020. Here's Ascena. They are the owner of Ann Taylor, Lane Bryant, Justice, Catherine's, Loft, Lou and Gray, and Kachik. They filed for Chapter 11 bankruptcy on July 23rd. They plan to close 1,600 of its 2,800 stores, which means more than half.
The retail casualty in the COVID crisis. After 58 years in business, Pier 1 Imports is now closing all stores. Pier 1 currently has more than 500 stores, which was already cut down from 1,000 last year.
Here is Bluestem Brands. They sell merchandise through catalogs and e-commerce. Part of their business model was providing credit to customers via installment plans and credit cards. They were able to get approved for their bankruptcy in July. They were $250 million in debt.
GNC has filed for bankruptcy and will close up to 1,200 stores. The 85-year-old vitamin and dietary supplement company is facing nearly $1 billion of debt.
It is the first name to file during the crisis, but it very likely will not be the last. COVID-19 has really accelerated trends and in this case made the weak weaker. Debt was really J.Crew's Achilles heel, owing nearly $1.7 billion. That debt has now been converted into equity in today's restructuring. J.Crew also securing $400 million in financing from existing lenders. J.Crew was, of course, once popular. It did have $2.5 billion in sales last year, but over time lost favor with consumers that just didn't want to pay those high prices or full prices for fashion that it no longer saw as very special or unique.
Neiman Marcus filed for bankruptcy in early of May 2020. Early on, they said they weren't planning on cutting a lot of stores or jobs, but just that they wanted to eliminate $4 billion of their debt. In late September, though, they signaled a pivot towards e-commerce.
Tonight, a retail emergency. Penney filing for Chapter 11 bankruptcy, becoming the largest retail to fall victim to the coronavirus, following Neiman Marcus and J.Crew. The 118-year-old retailer has struggled with slowing sales for years, COVID-19 exacerbating the problems. The company saying the closure of our stores due to the pandemic necessitated a more fulsome review to include the elimination of outstanding debt.
RTW Retailwinds, the parent company of New York & Company, filed for bankruptcy in the middle of July, where they planned to close most of their stores. Then in September, they ended up closing their e-commerce business.
Stein Mart has filed for Chapter 11 bankruptcy and say they plan to close a significant number, if not all, of their nearly 300 stores in 30 states.
Yesterday, the company laid off nearly 200 employees from its corporate office downtown. Now, there are 6 locations throughout Jacksonville. The company founded in 1908. News 4 Jax reporter Vic Micolucci joins us live from the store in East Arlington with what led up to this point. Vic.
A lot of financial woes over the past several years here, Lauren, and Target.
Here we have Tailored Brands, the parent company of Men's Warehouse, Joseph A. Bank, Moore's Clothing for Men, and K&G Fashion Superstore. They filed for bankruptcy in August. Here we have Tuesday Morning. They are a discount rate retailer that plans on closing 1/3 of its 700 stores. They are based out of Dallas.